Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
This is a joy. Nick Colas joins us right now. Thrilled that he could be with us. First of all, let me tell you about the jobs report coming up on Friday. It's at 8:30, and that means here at 8:30 on our economic indicators. They're brought to you by Commonwealth. Join over 2,000 independent financial advisors. They're taking control of their growth with advisor-centric support. Future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. We got to cover up something first. I mean, people go away to school, and they're like, it's good when there's other schools around. So if you go to Haverford like you did, and you're studying absolutely bizarre majors like Nick Colas did, you end up, you're walking the 2 miles, Turnbridge Road to College Avenue to Haverford Road. You're going north, deep north to Bryn Mawr to study. Nice. Did you do most of your studying at Bryn Mawr?
Yes, that was where I majored.
Seven Sister School.
They had the best archaeology undergrad program in the country when I was applying to schools, and so I studied with the very best people in the field for 4 years. It was awesome.
All women there.
It is all women there. Yes, Haverford had gone co-ed.
Okay.
3 years before I got there, I saw the last all-male class graduate.
Okay.
And then Bryn Mawr was single-sex, obviously, and so it was an interesting dynamic.
I see what you did there. Okay.
I mean, it's a plethora of people here. Jody Lurie, Bryn Mawr. Greifeld shows up sometimes without the horse.
Yep.
But this is a Philadelphia thing. Do you have any perspective on the Pennsylvania vote coming up? The axis of Philadelphia out to Pittsburgh, having been a mainline academic?
Mainline is sort of like Manhattan. It is its own little isolated world, so no.
Do you think it's definitive within the election? I don't hear a lot of people talking about it.
No.
Okay. Let's go to your research note. Nick Colas, of course, we protect the copyright of all our guests. Get it from Nick Colas at DataTrek Research. You have a stunning industry sector chart that in red shows you the max overweight of technology. What does Nick Colas do with the reality of a persistent tech overweight?
Yes, it is dramatic, and it's obviously, we're talking about the S&P 500 versus anything else, any other index anywhere in the world, MSCI Europe, Japan, emerging markets, everything. Tech is a heavyweight in the U.S. more than any place else, and the bottom line is you have to live with it. And there's a reason why these companies have gotten so big. They are disruptive innovators at scale, and they own most of the internet. And it's really hard to back away from that. Here in the U.S., we talk about it a lot as a negative. When I visit clients in Europe, everybody resolutely thinks it's a positive. And they think, thank God for U.S. equities, because if there weren't for the S&P 500, I'd be stuck owning MSCI Europe, earning 5 to 8%, instead of owning the U.S., which is compounding at 13. So we think of it as a problem here. Nobody else thinks it's a problem.
And it's funny because my personal opinion is one of the reasons we have such a robust tech business is because of the government. The government has historically taken a light touch to regulating technology, which in my opinion, has allowed Silicon Valley to become Silicon Valley. Whereas in Europe, I've got SAP, I've got ASML, and I think that's it.
A little Infineon, but yes.
A little Infineon, okay. So we'll see how that plays out going forward. You've got something in your note which Tom referenced, offshore gambling odds on the presidential elections. Are they important? Are they impacting the market?
It's funny, I've followed prediction markets for years, back to Predict It, some of the original Iowa analysis, and I've never seen as much interest in this as right now in this election. The prediction markets, the banking markets have really blown up, and I wonder how isolated or insulated they are from influence from people who know that they're now affecting capital markets. Well,
there's people putting gazillions of dollar trades into one of the predicted markets. Nick Colas, is it you?
Sadly, it is not me. Polymarket is the big market for that, and I think there's been reports of a whale buying between $30 and $40 million of Trump trades, and evidently he's a sophisticated French investor, French trader. And I've wondered, and I've written this, I wonder how much perhaps people are influencing the Trump contract because they know it spills over into peso and bank stocks and the yield curve and the long end of the yield curve. I wonder how accurate prediction markets will be now that they're hooked up to the rest of the financial system. Interesting.
So, I mean, as an investor, how do you think about this U.S. election? It feels kind of binary a little bit. Depending on who wins the election, there's different policies there. And is that factoring into your investment outlook?
The way we described it to clients was there's a very clear set of Trump trades because we saw what happened in the market after he won in 2016. Yield curve backed up, financials ripped, energy ripped. It's a very clear trade, and it's kind of happening right now. There's not as clear a Harris or Biden trade because when Biden was elected in 2020, we're in the middle of a pandemic. The vaccines were rolling out in between election day and the rest of the year. There's no clear Harris trade, right? But there is a clear Trump trade, which I think has forced people to say, okay, at least we know what to do if he wins. And that's why they've been working a Trump trade, because there's some clarity there versus no clarity with Harris.
What are you doing? What is the Nick Colas action to invest new money in the stock market, looking out 6 months, looking out a year, 2 years?
Yeah, the way we're looking at it is let's sort of get past the election. So we're talking about, like I said, a 1 to 2 year time frame. And there the playbook is pretty straightforward for us. It's long U.S. equities, it's small caps for a trade, it's financials, it's industrials. But really be very careful with Europe, Japan, and EM, because aside from China, there's not a lot good going on there.
Nick, you and I have talked about this before. They're the brats out in Silicon Valley. Everything's great. They got ping pong. What are the foosball? They got foosball machines in the lobby. DataTrek doesn't have that, folks. And all of a sudden, they've grown up. Thank you, Mr. Zuckerberg. And we saw it yesterday with Google margins coming in. Excuse me, folks, and gasping off the plague. Headcount coming in as well. There's a new sobriety in tech. Can you invest in that new sobriety?
I think it is certainly helpful. It improves return on capital. It improves margins. It shows that there's some grown-ups in the room with some discipline, and that's great. But ultimately, you're buying tech for Gen AI and for the next level of autonomous driving and a whole bunch of other things. The only thing the market consistently gets wrong in any sector is in technology, because it's so hard to predict the future of technology. So if you look at 10-year returns, tech has it over everything by a wide margin because the market doesn't know what's coming next. In every other sector, it's a lot harder.
I've got a Fed that's cutting rates. They cut initially by 50 basis points, yet my 2-year Treasury, I'm getting 4.14%. What happened there? I mean, I'm an equity guy, so I have no idea what's going on.
Yeah, the issue is economic growth picked up.
Okay.
And it still remains strong. We see it with the ADP numbers. We see it with the GDP numbers. Even though they're a little bit light versus expectations, they're still very robust.
Well, let's review that. 3%, 2.9% was a survey. It comes in 2.8%. And I'm looking, Paul, it's like a big red light going on. Personal consumption, 3.7%. In the old days, that's a boom economy, right, Nick?
Yes. I mean, this is one of those what else do you need to know kind of reports. You look at this and say, fine, I know everything I need to know for the next 90 days.
So what are you doing, I guess, in the near term? Like, for the next week, are you just telling clients, just de-risk to the extent you can de-risk until we figure out what's going to happen in a week?
We try very hard not to play the game that way.
Okay.
Because some of our clients are traders. My background is to some degree in trading, so we are telling them, okay, this is why yields have backed up and the financials have worked and energy has worked. So if you're long those trades, lighten up, because who knows? But aside from that, we try very hard to say, look, ultimately, like the Larry Summers quote is right. Europe's a museum, Japan's a nursing home, China's a prison, and the U.S., he didn't say this, but this is my addendum, the U.S. is a business.
So who's the quote there?
Larry Summers.
Okay. Say that again, though.
Europe's a museum, Japan's a nursing home, China's a prison.
All right.
And my addendum to it is America is a business. And the reason American markets work better than others is simply because they overwhelm the political side.
20 seconds, Near Eastern archaeology. Can there be a new Syria?
Ooh. I think what archaeology is helping more than anything else is that empires rise and fall, but they're very unpredictable. And you can have empires that go 2,000 years like Egypt. So it's facile to say, okay, the Roman Empire only lasted a couple hundred years. There are examples of things lasting a really long time.
Nick Colas, including Bloomberg surveillance. Nick Colas, thank you so much. DataTrek Research, just really, really important. We'll feature him in Single Best Idea, our podcast out today.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I'm looking at Google. Pre-pandemic, $31 billion in free cash flow. We got a model here. Mandeep Singh's got a model of $76 billion. It's like a double plus coming out of the pandemic. Are they hiding how successful they are? Is the bottom line, we're going to see it with Microsoft today, Apple tomorrow. They really don't want Washington to know how big and how fast they're growing, do they?
Yeah, and they know how to turn on the dials when it comes to top line or free cash flow. And that's what they showed last night is
the margin build out versus employee headcount was an act of God.
Yeah, I mean, all the new, in fact, 25% of new code is written by AI. For a company of Google's scale to say 25% of new code is written by AI, that just goes to show how far ahead they are when it comes to deploying these technologies. And then what it means for the headcount going forward. I mean, these companies will not grow headcount at least in the next 2-3 years.
So we hear anecdotally, Paul and I are reading on the weekend. Paul's at the beach. He's got the Vespa. He's having the morning coffee. And we're reading that tech and software engineers are having trouble getting jobs. Can you say it's because of AI?
They will certainly be more efficient and there won't be as many jobs. At the same time, I think what he called out was everyone is more productive when it comes to writing code as a result of this. And yes, that translates into some jobs changing because of the dynamic that code can be completed by AI system.
I think code can do like newscasts. John,
Tucker's job's a threat.
Can AI do newscasts?
We tried that in the old building or some version of it, and it was just a disaster.
Mandeep, we talk about Alphabet. It's still the search business, and I think I'm looking at the stock. It's only up 20% year to date because I think some investors are concerned about that core search business and the threat from AI. What did you hear last night from the company about that issue?
I mean, for a business of a $200 billion run rate growing double digits, that just goes to show that that threat was just a narrative. It's really not translating into any ad dollars going away. And what they called out was the lengthening of engagement when it comes to search. Typically with the traditional search, you would see the blue links, they'll show you an ad, you will go to the publisher website. Now people are engaging in a more complex way. That's what they said, that the time spent in searching, the complexity of queries is getting bigger, and that is what's helping their ad loads when it comes to the overall ad revenue.
Mandeep, we don't care. The only reason you're here is Paul and John Tucker's entire future is based on this bet on YouTube. We say good morning and we value everyone subscribing to Bloomberg Podcasts on YouTube. Michael Nathanson suggests YouTube swings to profit this year. Was there evidence there that John Tucker's making profit at YouTube?
Yes. In fact, along with the cloud acceleration from 29 to 35% this quarter, YouTube subscriptions grew 28%. Just think about it. It's a $15 billion plus run rate business. Just the subscriptions piece. I'm taking out the YouTube ads, which is another $40 billion. Subscriptions piece grew 28%. Now compare that to Netflix. I mean, it's growing mid-teens, 15%, higher run rate. But still, that just goes to show how much traction they have with YouTube. So clearly that's working.
All right. I was using Google search last night trying to figure out something. What is AI overviews? That's coming in. I don't know what that is. What is that?
So basically what they've changed is the search page will have a summary of, whatever query you have. The prompt can be any length. And they show you an overview of all the blue links that they are showing you underneath that. So they have basically combined generative AI along with their traditional search. And then that Gen AI overview is the generative AI.
But there's no way John Tucker's using generative AI. I can just tell you that right now. What do you think?
Maybe I am, and I don't know.
No, exactly. I would
you.
Concur with that. Yeah.
All right.
Yeah.
Microsoft today, it's off your remit, right? You're not following Microsoft. Right?
If you're looking at cloud, you have to look at Microsoft and
So
Amazon.
what are you looking at here at 415?
The Azure growth. And the bogey is higher than what consensus numbers are, which is 31% growth for an $80 billion run rate business. I think the bogey is 34% because Alphabet, Google's cloud business grew 35% last night. So anything less than that would be perceived as somewhat of a share shift. And
so translate this back. He's talking Mandeep Singh. I have no idea what he just said.
I don't know.
They need to get 35% growth in what part of Microsoft?
In their Azure cloud business.
Oh, Azure.
Azure.
Okay.
Yes. And that's a much, so think of Google Cloud as a $45 billion run rate business. The Azure Cloud is an $80 billion run rate business, and Amazon AWS is a $105 billion run rate business.
The regulators have no idea what's going on. There's no way to put this genie back in
And
the bottle.
that's the big risk when it comes to Alphabet. So Sundar Pichai last night did call out that risk of, the DOJ cases and what it could mean for the company, and that is the big risk for the company.
$100 billion, $80 billion, I think you said $40 billion.
Yeah.
You add it up, and all this stuff we're talking about runs on electricity, I believe. I mean, we're directly linked in here at our world headquarters, folks, to Staten Island. When Mr. Bloomberg turns on the lights in the morning, Staten Island dims. I get it. Yeah. Where's all the electrical generation for the $180, $220 billion of business you're talking about?
I mean, in fact, Google did mention last night they are investing in nuclear reactors for some of their
new ones or refurb like 3 Mile Island?
I mean, these are, and they're doing it in partnership, so it's not all Google, but clearly that's part of the CapEx. The $13 billion in CapEx they spent, some of it is going towards building new data centers and adding nuclear power.
And they need water to cool, so they're going to go between John Tucker's house and the restaurant, right, at the ferry? I mean, is that where the plant's going?
Yeah, right in my backyard.
Yeah.
Tom, the S&P 500 Utilities Index this year, that's up 25%.
Yeah,
utilities.
It's amazing.
Plus the dividends you get.
I feel we haven't covered that. Eric, can you make a note? We got to get a bunch of utility animals in here to talk about Mandeep's world. This is exciting. I mean, did you expect this 5 years ago, Mandeep?
We're talking about 1 gigawatt data center. I mean, just think about it. Right now we're at 25, 50 megawatts, 1 gigawatt data center. Yes, I did not expect this coming that quickly. So, no.
A gigawatt.
Yeah.
Okay.
That's a lot.
1.21 gigawatts can power more than 10 million light bulbs, and they're all burnt out in John Tucker's basement.
It can probably power the entire New York City if you think about it.
A gigawatt.
Yeah,
a gigawatt.
It's like physics with Mandeep. It's great.
All coming out of Silicon Valley.
Is your arm okay? We get email coming in here. They're worried about it.
Getting back to playing tennis
Wimbledon?
soon.
Are you going to be ready for Wimbledon?
I don't know.
We'll talk. We get some free time your way. I want to talk to you about. I had the honor of seeing Vijay Amritrov with Borg at his peak at Forest Hills, and I really want to get time to talk to you about that. Mandeep Singh there in the middle of earnings season.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
When I was in Rome recently, this was really front and center. The international view of America's fractured politics, whatever your belief. Lindsay Newman, working with Ian Bremmer over at GZero over at Eurasia Group. We're thrilled she could join us right now. Dr. Newman, the view from 60,000 feet. What does the first G7 meeting look like? I dare say Russia attends G8. What does the first G7 meeting look like for President Trump or President Harris?
Well, as you know, Tom, we're just a few days out from this election, and it has been a turbulent, tumultuous one. We've had Donald Trump, former President Trump, suggesting that should he win this election on Tuesday, which remains a dead heat in anyone's game, that he would immediately begin the process of bringing the parties together in the Ukraine-Russia conflict and seeing if he could bring a resolution to it. He says the U.S. is on the brink of World War III. Those are the stakes that, as he sees them. So we would have to expect a lively G7, G8, as you say, should it be Trump. Harris, as you know, the big thread line, and I feel it too, is that it's a bit of an unknown. She has tried to associate herself with Biden administration successes, perceived successes. She has tried to distance herself from those areas where it may have fallen short. Of course, Trump is always talking about Afghanistan. Afghanistan is a key sticking point on U.S. foreign policy. But there's a lot of unknown there on what a Harris presidency presidency would mean on foreign policy. And we have to expect it would look a lot like what we've seen before from the Democrats. So those allies in the G7 would be the important partners for the U.S.
Dr. Newman, are we going to know at 9 or 10 o'clock at night on November 5th who our president is? If not, how long do we have to wait?
It's a great question. I mean, 9 o'clock at night for me sitting here in London, absolutely not. 9 o'clock at night for you sitting over there. I think the answer is still no. This race is a toss-up at the national level. Trump has now erased Harris's lead that she's held essentially since building her case in the race in when she entered in July. We know that each one of these swing states is also a toss-up and have traded back and forth. So if anyone tells you they know where this race stands today, either back away and close the door or run towards them perhaps. But what I would just say, there are a couple of signals we can be watching. There's the momentum, which I've already talked about. There's this anti-incumbency sentiment that has circled the world, right? We've all been saying, oh, this is the year of elections. A half of the world's population will be voting. Harris may very well get caught up in that because voters may want change. They're feeling their pocketbooks are lighter. And then the early voting signals that we're already seeing are interesting. 53 million have already voted. There is some indication that perhaps Democrats are ahead on that, have had more votes cast. And interestingly enough, women may have voted more so already than men. Democrats feel that gender gap is going to be critical for them. But I think the short answer out of my long is no, we're not going to know at 9 o'clock at night.
For Trump supporters, and frankly Harris supporters as well, there seems to be a primal scream to find a Harris foreign policy that is distinctive and differenced or nuanced from a Biden foreign policy. Is it out there? Does it exist, this distinction of a new change in foreign policy?
I think you're absolutely right that there is a desire for change in foreign policy. I think it is not out there yet. But one point that I always come back to is personnel. We are not going to have the same personnel around Harris should she win the presidency.
She won't rehire Blinken
on foreign policy. She is not going to. I think it's very unlikely that she'll rehire Blinken. I think Burns is a likely familiar face that we'll see again. But it's not going to be Jake Sullivan. It's not going to be Antony Blinken. It will be a new cast of characters, some who have had ties to, say, the Obama administration. But the personnel is personal, and I think it will shape foreign policy.
So how about down ballot voting? What do we know about that these days? Because, I mean, we need to be able to call Congress at some point next week. How is that looking?
Yeah, I mean, look, it's also been very close. I think the expectation there is that we're going to see some split in the two houses, and that is going to affect whoever holds the White House, and we know that. Last night Harris was talking at that very stunning event at the Ellipse. Brought 75,000 people out, got under Donald Trump's fingernails with all those people, but she was talking about national security and the way forward. But she's talking about immigration reform. How is she going to get immigration reform? No president has been able to get, say, massive immigration reform through the houses because of these divisions that we see both within the houses and across the houses.
Does foreign policy matter inside the voting booth, sitting at your kitchen table, writing in the ballot? Is there any evidence that foreign policy matters, or is it all domestic at the end of the day?
We've all seen, there's been a million articles that we've seen about how foreign policy never matters, how it does matter this time around. I promise you it matters this time around. Donald Trump this weekend, speaking at Madison Square Garden, said he opened with this question: are you better off today than you were 4 years ago? Tom, that is what matters to voters this election. The fact that he thinks that they might be on the brink of World War II, that's of interest. But we know the top issues here. The top issues for voters are the economy, inflation, immigration. If you call immigration foreign policy, then maybe you've got a slight asterisk there. But what matters to people is how they're feeling in their pocketbooks, in their checking accounts, when they look around their friends and family.
Are we now at a new normal, Lindsay, as to the electorate? Is it split 50-50 just now going forward? It seems like the lines are so drawn and so set that I'm not sure how that changes in cycles going forward.
Yeah, it's a great point, Paul. I mean, I've been writing a lot about what I was calling radicalization, which is just this idea that American voters are moving towards the polls and not towards the center. We know that Democrats and Republicans don't share facts. We know that they don't have a lot of love lost between them. We are in a hyperpolarized moment. I think it's a generational hyperpolarized moment. Generations can be long, and it's distinctly possible that this is just where we are for the next couple of cycles, because we're not seeing a retrenchment back towards the center. We're not seeing a big pull in either parties towards the middle. That's just not the trend line.
And I was talking today to Roman, who's one of my great editorial advisors. Roman and I were going back and forth on the David Brooks essay that was out a week and a half ago, 10 days ago, on just what you're talking about, Dr. Newman, which is a polarization. And yet, like Reagan and Ford, Ron Reagan, to get elected, moved to the middle. In the next 6 days, I mean, the President Trump's got a method. Let's be honest. Vice President Harris, is there any tendency to move to the middle?
I think what Vice President Harris's campaign has tried to do is to leave it open to interpretation, that she wants you to see yourself in her candidacy. That's why we don't see her drilling down on policy, despite the efforts to probe, despite the interest in understanding, as you asked me earlier, what really is the there on foreign policy. And I think it's because she's going to craft it as she goes if she wins this election. I don't expect us to see more of the dots filled in, though, on policy, either domestic or foreign policy, in the days ahead from her side.
Don't be a stranger. Bring the Bremer guy along with you next time. Lindsay Newman with Eurasia Group and GZero Media from London this morning. Really informative there, whatever your politics.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
This is what surveillance is about, folks. We codified this decades ago. I can't say enough about we move when the story moves. Joining us in 14 minutes, Woo Jin Ho will join us. He is expert on super microcomputer with Bloomberg Intelligence. We're thrilled he's freed up his schedule to speak to us. Paul, why don't you bring a guest in here on the shadows of private credit?
I tell you, this is, again, I've kind of been in this investment game for 35 years. One of the most amazing developments to me has been, in addition to ETFs, this private credit business. We all grew up with private equity, but private credit has become just an extraordinary alternative investment opportunity for a lot of investors, particularly after the great financial crisis when some of the banks were pulling back on their lending. And kind of what I know about this business, I learned from our next guest, Randy Schwimmer, Vice Chairman, Investor Solutions Group, Churchill Asset Management, most notably from the JP Morgan Chase corporate banking business and loan syndication business. That's
long time ago, Paul.
That's where you learn credit, and that's where I learned my credit chops there at Chase Manhattan Bank. Randy, we got interest rates coming down, although the yield curve is steepening, but interest rates generally coming down. The Fed's lowering rates. What does that mean for the private credit business?
By the way, a shout out to James Crombie and your Credit Edge podcast. I'll be, if you want 60 minutes of me and private credit, tune in tomorrow for that. So, yeah, rates are probably coming down. Spreads across the credit spectrum, as you guys have reported, are tightening. The Bloomberg high yield spread index is below 3%. I mean, that's a little bit nutty when you look at what the potential risks over the next 6 months are. But really, capital markets are wide open. And in the midst of all this, private credit is actually, according to JP Morgan report that they put out a couple days ago, credit spreads in private credit have actually increased by 25 basis points. Now, let's think about that in the context of everything going on. Part of what's going on is that the broadly syndicated market, which we know has been more active this year than ever, has been able to affect the large cap market, the large middle market deals. But in the traditional middle market, in the direct lending market that Churchill's in, spreads have actually gone up a little bit. Why is that? Deal flow is starting to come back. I always like bringing stats into you guys every month. Global M&A up quarter over quarter by 9%, according to S&P. Year over year, 23%. So as deal flow increases, people can be more picky. So they like us say, hey, I'd rather take something a little more spread, a little more protections for our investors. So spreads are actually coming up. The other thing that's going on is the illiquidity premium between liquid markets, the broadly syndicated loan market, private credit, has actually widened to a 5-month high.
Right.
So very attractive for investors right now.
Right where I want to go to. I want this explained. Randy, you're the best to do this. Everybody's concerned, even people supporting private equity, private credit. We intuitively get in private equity, you buy something, it's locked up for 7 years, whatever. You got to wait to get out. Then when you get out, you can't get out. It's intuitive in equity. It's not in your world. Now, you just discovered that. What is the lockup in private credit that needs to be analyzed, studied, calmed, or concerned about?
Yeah, so you're pointing to the issue of liquidity, right? And illiquidity, which has tended to be viewed as a negative in markets that are very correlated, and we saw that in spades, in 22 and a little bit in 23, tends to be a negative for investors because they want something that's an alternative to the correlated assets of public equities and fixed income. And so they seek alternatives, including private capital, to get a little bit more calm during periods of stress and turmoil. So what's happening for private credit investors is that the valuations associated with our loans tend to be a lot more stable during periods of volatility. And so what they're trading for in terms of lack of being able to trade on demand is the ability that during a crisis, they don't see the kinds of moves in prices that we're seeing now. Oh, yeah. All of our loans are valued by third-party agencies, and so it's not just us valuing, but they're valued by others as well as the fundamentals of these companies. They're not traded the way that the broadly syndicated loans are. But the fundamental difference, I think, now is that with the M&A market opening up, these loans are going to start to trade more often in the sense that deals are going to start to get done and refinanced. Private equity, which has been stalled, to your point, because capital has been locked in with these deals where LPs are stuck because they haven't seen realizations. Now those realizations are going to start to come, and I think we're going to see more of that next year.
You guys get a gajillion pitch books coming through your door every year. How do you screen them? What do you like these days?
Well, we get about 1,000 deals a year coming from our private equity friends. As I've told you before, we're an investor in their funds. So these are kind of pre-screened transactions. We could probably do all of them and be fine, but some of them fit better into our credit book, right? Mm-hmm. So some are more equity-like, high growth, and in the credit world, as you know, you're getting paid principal and interest. So you just want to be, it's not being first or second, it's finishing the race. What we're looking for is kind of what we've been looking for, which is defensive industries, sectors such as, you mentioned accounting firms, regional firms in this business. We're going around that right now. It's very steady Eddie. Doesn't matter what the tax rates or tariffs are, you still need FIFO and LIFO. So I think that business services is really good right now in terms of what we're seeing.
With Churchill Asset Management, Randy Schwimmer with us right now. Looking at Google up $10 to a 179 and off the trading range going back to midsummer, I'm going to call it. That was where Sweeney took 3 Fridays in a row off.
Yep.
Back then, there are 3.8 standard deviations. I think we can say surge is appropriate.
Yeah, surge is appropriate. Randy, talk to us about the private equity world. What are you seeing from your private equity clients in terms of deal flow? When we hear Jamie Dimon and Brian Moynihan at the big, Wall Street banks thing, activity's picking up. They feel more bullish about activity. Are you seeing that in your book?
So our platform, so we do private credit. We have a junior capital, co-invest, and fund-to-fund business. We also have a secondaries business, which is actually one of our fastest growing. And going to the point that Tom mentioned about liquidity, when these investors and some of the GPs are stuck, the secondaries market has been one of the fastest growing in the private equity space because realizations are slow. And so if you're an investor in a fund or if you're a GP with a sponsor, you're kind of looking for ways out. And you can create liquidity through the investments that you have and the portfolios that you've created, because the enterprise value that's there is being tapped by firms like Churchill to be able to help them access liquidity when otherwise they couldn't. So the sophistication and technology in private equity now has changed so much since the old days when you basically had a portfolio company. If it's stuck and you can't sell it, that's it. But today you can actually transfer value into, for example, another fund that you control. So these co-invest vehicles are red hot right now.
Give us a comparison yield. I think it's something I'm ignorant about. What's a blended yield of a private credit Churchill transaction versus high yield versus 4.x% 10-year full faith
so I
credit?
mentioned the illiquidity premium. So you're about 200 basis points differential in private credit relative to liquid loans, number one. So you're probably another 50, 100 basis points above the high yield bond market, okay? Because think about where your high yield Bloomberg spreads are right now. And then if you look at private equity, depending on, we're sort of a top tier investor focusing on top tier firms, you're looking at 20+% returns for the best private equity sponsor. So you have the ability as an investor to choose with, our platform, stream of income that's safe because you're top of the capital structure, secured by all the assets, senior credit, but then you can migrate up the risk spectrum to get more yield. Right. And what investors are looking now for is, how do you adapt in the current climate? How do you adapt when things are uncertain? How do you adapt when markets can be volatile? And there's a safe harbor that's been created, and that's why you're seeing the growth that you do.
I'll get one more in here.
Real quick. One of the things, regulations, I see the FTC and the DOJ blocking a lot of the big deals. Are you seeing that as a headwind?
Well, again, private credit tends to be a little bit of a different environment because these companies are privately held, they're not rated, they're not traded, and private equity sponsors have been looking at industries that they like for like a decade that are smaller. These are medium-sized companies. These are companies.
These are small companies. Revenues, you don't have to worry about that.
Yeah, exactly.
That makes sense.
And you're doing the James Crombie podcast
tomorrow. Check it out.
Check it out, folks. Crombie's like the real deal.
Credit Edge.
I'm taking notes from Credit Edge. I'm taking notes from James Crombie. That's really special for Global Wall Street. Randy Schwimmer, Churchill, and James Crombie. Look for that, of course, at Bloomberg podcast.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.